My guest today is Rashmi Badwe. She is the COO of TIAA Wealth Management. So, Rashmi, welcome to the podcast.
Thank you for having me. It's a pleasure.
It's a pleasure to have you here. Before we get going, for the benefit of our viewers who may not be familiar with you and your work, do you mind giving us a brief overview?
Happy to, Bob. And let me start with TIAA, the firm I work at, because folks may not be aware of what we do. TIAA was set up in the early 1900s, in fact, 1918, by Andrew Carnegie, as a means to provide pension for teachers. And he, by the way, believed that teachers were one of the highest professions in the world. 105 years later, we continue to serve colleges and universities in higher education and healthcare. To give you some scale of the firm, we have about 1.2 trillion in assets. And in 2021, the firm paid out about over 6 billion, in fact, in lifetime income to our retired clients. So that's a little bit about TIAA. I am the chief operating officer for our wealth management division. And that business is about 150 billion in assets, 600 advisors and growing. And we focus a lot on providing financial planning services to our clients and helping them with their assets in the retirement plan that they have with us, in our case, 403(b) accounts, as well as money they may have outside of their retirement plans. And my role as COO involves overseeing our investment management for our managed accounts, product solutions for wealth management, strategy, the trust company, our broker-dealer, and operations.
Yeah. So we are, just as a side note, we're good friends with Dan Keaty, who sits on the Retirement Management Analyst Certification Strategic Committee for us and helps guide what we're doing with respect to retirement education for the benefit of the Institute members. So we're happy to have you here.
Yeah, Dan's a great guy.
Yeah, he's a great guy. Tell us more a little bit about your career journey, where you began and how you got here.
So I grew up in India. I studied engineering and physics when I was there. Then came to the US to do my MBA. After my MBA, joined consulting. I was at Deloitte Consulting for several years. Then I did what many consultants end up doing. I joined a client of mine, JP Chase. And from JP Chase, I came to TIAA. I've been at TIAA over 15 years now. Throughout my career, I've done lots of different roles across sales and strategy and operations, and now COO. My experience has mostly been in consumer financial services, but it spanned retirement, banking, investments, and insurance. And I will say, Bob, my early experience at Chase is what has really shaped all my career choices on a go-forward basis. I had the opportunity to figure out how we do staffing and sales management for new retail banking branches. You started with no clients, no deposits day one, and you typically had to break even in 3 years. So I had to figure out how we do staffing and sales management for these branches. But then I got the opportunity to actually manage some of these branches. And I will tell you that was in many ways a very humbling experience because things never quite work out the way you thought they would and the way you put them on paper. But it was also a tremendous learning experience. And I learned that I loved roles where you start with a blank sheet of paper, you design a solution, and then you go help deliver on it. So in many ways, my current role is very similar. It feels like a startup within a big firm.
So talk more about your current role in terms of what's going on with the TIAA's wealth management business.
So we took a hard look at our business a few years back, and we did a deep assessment. We spoke to clients, we spoke to advisors, we understood where the gaps in our business were. We also understood the potential for our business. So what we are doing right now is embarking on a very, very large transformation of the business. I would say across all dimensions and all aspects of the business. For example, we've brought in a lot of talent from the outside to complement the talent we had internally. We are looking to grow distribution, not just advisors, but even our digital distribution capability, because we're not a wealth firm that supports just high net worth clients. We support the spectrum of needs from mass market, mass affluent to high net worth. So growing distribution is a priority. We are looking at our products and solution set, starting with client needs. Where do we have gaps? And that's going to dictate our product journey over the next few years. And then finally, we're looking to make a significant investment in technology. The best way, Bob, I can describe that is we're looking to fix the leak versus keep patching the drywall.
So I'm eager to hear more about technology and digital capabilities.
Yeah, so let me start with the bad news in some ways. I don't think there's no silver bullet when it comes to modernizing technology, especially for large firms that often have a lot of legacy data and infrastructure that's been built up over the years. And we are approaching it in two ways. As I said, we want to focus on fixing the leak versus patching the drywall. That's one. Second is we want to look to leveraging the technology ecosystem in a different way than we have done in the past. So let me tell you what I mean by these. You think of fixing the leak versus patching the drywall. As a customer, Bob, you're very familiar with this. You go onto Amazon, you're browsing a product, it shows you, well, the last time you purchased this product was so-and-so date, and you can link to the order, right? To me, that's good data underneath it that is enabling that, right? Well-stored, easily accessible, controlled data set underneath it. The other is, when you go on Amazon, again, as an example, you can see where your package is, right? Hey, you could say it left the Trenton post office and is going to arrive at my home in Princeton by 4 p.m. Well, that's supply chain automation. That's using RFIDs and barcodes through the supply chain. The equivalent in our business is a front-to-back process, right? That goes front office, middle office, back office. So to me, if you have to have good experiences, you have to invest in the foundational capabilities like data and optimizing your supply chain. So that's what I mean by when I say fix the leak versus patch the drywall. That is the type of investment we're looking to do. And then the tech ecosystem is also an interesting thing. I think many firms at one point started with building their own technology. Then we went down the path of integrating best of breed. So you had a best of breed investment management solution, best of breed custodian platform, best of breed workflow that you're using to knit all this together. But that proves to be a little hard, especially for firms that don't have a lot of scale. So the approach we're taking is to say, let's step back and rethink this. A lot of middle and back office processes, when an advisor is putting in a request to change addresses, beneficiaries, take a required minimum distribution, or a client is doing that, that's a commoditized process. We don't want to spend our time and energy on integrating those commoditized processes. So we want to leverage a third-party partner that maybe gives us 80, 90% of what we need. And where we want to put our energy and look for best-of-breed solutions is in the front office, where the advisor interacts with the client. In our case, integrating with the retirement business so that there's a seamless experience from retirement into non-retirement solutions, or providing insights to clients. That's where I think our precious time, energy, and resources need to be spent.
So does that translate into sort of more personalized experiences for the client then?
It absolutely should. So, if you actually look at what's happened in the industry, in my view, it's very interesting. It's a growth industry for sure, wealth management. But the top line growth numbers have masked some underlying dynamics, right? I think a lot of the growth has come from market appreciation, not organic growth. And there's pressure on margins because it's a competitive industry with a war for talent. The regulatory burden is evolving, and customers want the Amazon, Uber-like experiences, and they expect that out of financial services. So to me, what that means is we have to think of competing differently. Like, gone are the days when you competed based on product. Today, you're trying to compete on experience. I don't think that's going to be sufficient pretty soon. Good experiences will become table stakes. And what we would have to do is provide deep personalized insights to our clients. And that is why I think this technology and data transformation becomes absolutely key for us.
Yeah. Just as you're talking, I'm thinking that's no easy task, in part because, especially as it pertains to retirement income planning, I often think of it as a row by row, as a spreadsheet, a row by row and a column by column exercise where no one person has the same facts and circumstances.
That's exactly right. This is absolutely not going to be an easy exercise. I think if you think broadly about the challenges associated with a transformation, especially in the technology space, it's a few things. One is changing habits is hard. And so what happens is adoption can become a problem. It's like you build a great new mousetrap, but the mice are finding a different path. Or the other thing that happens typically is there's a tendency to lift and shift what you have today onto a new capability, which means you're taking all your legacy duct tape and Band-Aid onto the new technology platform. So if you ask me, those are the things I actually really worry about. Every solution is solvable. It's the change mindset. It's the ability to think differently is where the rubber is going to meet the road.
Yeah. So you mentioned one risk or drawback to using and relying on technology. There are others?
Well, I certainly think, I don't know if it's a drawback, Bob, but it's certainly a challenge we're all facing, which is take modern technology like AI, where there's been a lot of buzz and hype about AI. And the question is, how do firms leverage these capabilities over the long run to differentiate themselves to compete effectively? And, it's interesting. The most common question I get from advisors regarding AI, will it replace me? Mm-hmm. That's the question I get. And I don't think that's on the horizon, by the way. I think AI is in its early stages, a little bit like the internet was once upon a time. Everyone's experimenting. Things haven't quite settled, though. We, like other firms, are certainly experimenting as well. And the way I see AI playing out is more as a co-pilot for the advisor. Mm-hmm. So using AI to make an advisor's job easier, more efficient, more effective. I'll give you maybe 2 examples of use cases we're looking at to make this tangible and real. One is when a new advisor comes on board, you invest a lot in training them and skill building. One of the things advisors do is role plays. Mm-hmm. And we're looking at a use case where AI can potentially give real-time feedback and grade the role play. Because unlike machine learning, AI is very good at understanding what is happening in real time and reacting to it and providing insights based on that. So that's one use case. The other is giving advisors tips on good documentation when you're doing account opening is an example. And by the way, what it can do is not only look at that advisor's documentation patterns, but also look at all the advisors and where are the big gaps we've typically seen and what are best practices. So that's what I mean by looking at AI as a co-pilot to the advisor. The other, though, interesting thing is a lot of discussion in the industry about the ethics of AI, for sure. But what is not talked about a lot, in my mind, is what it means to the advisor-client relationship. So here's what I mean by that. I think AI in many ways has the potential to do what WebMD did for doctors. So WebMD is a great tool, by the way. You can go get a ton of information that you did not have access to before. But on the other hand, you also run the risk of you look up your symptoms and you're convinced you have cancer. So this interesting paradox that consumers are going to be more savvy because they have ready access to information, but they're at the same time potentially more misinformed. Mm-hmm. And the question is, how does an advisor deal with that when a client's gone online, done a search, has a point of view, and it's a point of view that the advisor needs to course correct? So I think that's going to be an interesting journey for us and challenge for us as the usage of these tools gets more and more prevalent in the industry.
Yeah. In one of the other hats I wear, we for Retirement Daily on the Street, we've been running a series called Man vs. Machine, where we ask AI a question, a personal finance question, and then we ask a subject matter expert to critique it. We've had Colleen Carcone and Joel Goldgrab
That's right.
Participate in this, and what we have found is ChatGPT or Perplexity or Bard gets some things right, some things wrong, and then there's some serious material omissions. And I think it was Joe or I think who said maybe rely on chat for wedding jokes and best man speeches at the moment for getting good content. But But on the other hand, we just did a podcast with a gentleman named David Macchia, and David thinks that FAs have something to fear, and to which I challenge him and say, well, not yet, maybe at some point, but at the moment, I don't think they have anything to fear. I think your analogy about WebMD is a good one because, right, it certainly maybe gave us some walking around knowledge, some to talk to a doctor about our symptoms or potentially diagnosis and potentially courses of action, but it didn't replace doctors.
That's right.
Yeah.
And, it's hard to have a crystal ball on some of these things. So to your point, I don't know if it happens eventually or not. I just don't see it on the horizon.
Yeah. We talked a little bit about clients and the complexities. How do you see that evolving? It probably doesn't get simpler, right? In terms of...
I don't think it gets simpler. And we spend a lot of time, we're a retirement company at heart, as you know. So we spend a lot of time talking to our clients about needs, and we understand retirement needs a lot. So here's what we hear. Clients take retirement, or you could take any life event. They look at it as a life event, not a point-in-time product or solution. This came home to me very recently with my dad. He retired after a long career in the corporate world. He retired several years ago, but he still has a lot of questions. And his questions are, should I be getting long-term care or is it too late? What if my mom outlives him? How will she handle the finances? Rashmi, how do I estimate my healthcare costs given where I live? Not just today. What are they likely to be 10 years from now? For him, this is not an event where he built X dollars in a nest egg and he's drawing down and he's done. So that's what I mean. It's a life event. And I think we don't, as an industry today, necessarily cater to the broader life event in a very effective way. The second is people are living longer. And I think they need help even after they retire. So longevity risk is real. As you know, TIAA has done a lot of research in this space. We've also seen that 40% of American households are likely to run out of retirement income. That's an astounding number, right? 100 million people in this country. And people need help because retirement is now, 25, 30-year horizon? That's significant compared to a client's length of working years. And things change a lot in this time frame. We're living it now, right? Inflation is different, interest rates are different, markets can take a tailspin. You may need a hip replacement that changes your expense level. All these things can happen. And Bob, I actually think this is a white space in the industry because we have a lot of solutions to help clients manage their money well in their working years when they're getting an income. There are hardly any solutions to help clients manage their money after they retire and are taking it.
I often think they are.
No. So we just feel very passionate about this space and trying to crack the code in it. I don't think anyone has.
Yeah. Two reactions to what you just said, Rashmi. One is I often think there are no best practices in the financial advisor space, given the different modes of regulation or the different modes of compensation or the different modes of training and education. That's one. And two, I think about the knowledge required on the part of the FA is gargantuan compared to what it used to be. Advisors need to know, as you just mentioned, long-term care insurance, possibly the interaction between HSAs and Medicare, the new IRA rollover regulations, what's a reverse mortgage and what role could it play in someone's plan, et cetera, right? The list goes on. The knowledge demands are great.
That's exactly right. It's not necessarily just a product or solution gap. To your point, it's access to specialists, training, education, best practices, as you mentioned. All of those things, I think, have to be solved. And there's a reason it hasn't been done so far. I totally get it. But it is also a very real client need and a very clear gap in my mind.
I spend a lot of my time thinking about the sort of the pre-retirement and the retirement years, but we also know my son just entered the workforce and just had to sign up for a 401k and HSA and whatnot. So it has to start early too, does it not? This sort of
it absolutely has to. It absolutely has to start early, Bob. And we hear that again loud and clear from our clients as well, because decisions you make from a financial perspective early in your career can have huge outcomes, either good or bad, towards your retirement readiness, right? Student loan debt you have, your ability to pay it down, good example, right? Things like that, saving early, saving enough, investing well. So absolutely, I don't think you can really solve client needs and help clients unless you're providing them relevant solutions and transition solutions as they join the workforce. Then they're in mid-career, then they're evaluating their options for retirement, and then they're in retirement. And that for us is very important because we are not, as I said, a wealth management firm that focuses just on the high net worth. Right. We focus on all our retirement plan participants, and they cover this spectrum for us.
Other trends besides technology that you're witnessing?
So, as I said, lots of margin pressure on firms. The margins are looking good. And I think that value creation mechanism is going to have to be different in the future. You have to develop insights, personalized insights for clients. I think the basis of competition changes. And interestingly, I think, and there's no crystal ball on some of this, Bob, for sure, predictions are fraught with risk. So I wouldn't call this necessarily a prediction, but more what could be possible. I do think over time we will see firms converge on the capabilities they offer, driven by what clients need, demand, and making it easy and relevant for them. So what I mean by that is 30 years ago, you had a separate bookstore and a separate grocery store, right? Who thought you'd be shopping for books and groceries at the same retailer? The equivalent to that today is, banking and retirement, investments and insurance, all separate and distinct, right? Grocery store versus bookstore is what we have today. And yet clients think holistically and need help across all of these. So I think there's a chance as technology and data evolves and makes it easier because it's very complex. I think firms will try to create value by providing more integrated experiences across what have been historically, I think, silos in many ways.
So a couple questions, Rashmi. One is, do you fear sort of non-traditional entrants into the marketplace? An Amazon, an Apple, a Walmart, in terms of their ability, their connection with consumers already, and their ability to enter the market, given maybe what could be fairly low barriers to entry?
I absolutely think, you're already seeing some of these big players make inroads in parts of this, right? Apple's tie-up with Goldman was an example. So yes, I think that is a risk. I think that is a risk firms in the industry have to be aware of, and I think need to take actions now. These firms will need domain expertise, right? The regulatory environment, the domain expertise is highly complex. So I don't think a tech firm without some form of partnership and domain expertise could be successful. They could go acquire it for sure. But by the same token, established firms in the industry have the domain expertise. They don't necessarily have the technology. So in my view is which one gets to the middle ground the fastest is what it will dictate.
Yeah. So the Institute is comprised of 15,000 or so financial advisors who have the CIMA, CPWA, RMA designation. What advice do you have for our audience, for the FAs that are listening to this?
I would say the one piece of advice I would give FAs is don't be afraid of technology. Don't be afraid of AI. I think the more you engage with it and learn how to use it effectively, I think you become really more efficient and effective for your clients. So keep the fear aside, I think, and embrace it.
So we covered a lot of ground. Anything we missed or anything that bears reemphasizing?
No, I think this has been a wonderful conversation. Thank you for having me, Bob.
Yeah, thank you, Rashmi. And hopefully you'll join us back at another point in time, and we can talk about how technology has evolved even further.
Happy to. Glad to be here.
Thank you for listening to the Exceptional Advisor podcast brought to you by the Investments in Wealth Institute. If you've enjoyed this podcast, please subscribe through iTunes, Spotify, or our website at www.investmentsinwealth.org/podcast to get the latest episodes of our Exceptional Advisor podcast series. For additional resources, updates on events, and exclusive membership deals, visit www.investmentsinwealth.org.